Investment banking. It's a pretty interesting world. It deals with lots of money and even bigger risks. But what is it exactly? Simply put, investment banks are like matchmakers for money. They connect companies that need money with people who have money to invest. Think of them as the best deal makers in finance. They work with the big players, huge companies, governments, and very rich people. They're experts in capital markets. That's where huge amounts of money are raised and traded. They help businesses grow by helping them get money. Basically, investment banking is a really important, even though often misunderstood, part of how money works around the world. Investment banks do a lot of different things, but their main jobs fall into a few key areas. These institutions are crucial in the financial world, acting as intermediaries and advisors in various complex transactions. First, they're underwriters. Imagine a company wants to go public, meaning they want to sell shares of their company to anyone who wants to buy them. This process is known as an initial public offering, or IPO. Investment banks make that happen. They work with the company to decide the initial price of the shares, advertise the shares to potential investors, and help sell them. This involves a lot of research and analysis to ensure the shares are priced correctly and attract enough interest. Next, there are mergers and acquisitions, or M&A. When two companies combine or one buys another, investment banks advise them and help make the deal happen. This can be a very complex process involving negotiations, valuations, and legal considerations. They help decide on a fair price, negotiate the details, and handle all the legal stuff. This ensures that both parties get a fair deal and that the transaction goes smoothly. But there's more. Investment banks also buy and sell stocks and bonds. This is known as trading, and it helps to keep the financial markets liquid and active. Here they connect buyers and sellers. They make sure there's always someone willing to buy or sell, which is essential for the smooth functioning of the markets. They also provide valuable insights and advice to their clients on when to buy or sell. Finally, some investment banks manage money for very wealthy people, giving them financial advice. This includes managing their investment portfolios, planning for their financial future, and ensuring their wealth grows over time. Now let's talk about how investment banks make money. It all comes down to fees. When they help a company go public or sell bonds, they charge fees for that. These fees are based on how much money is raised, so bigger deals mean bigger fees. Investment banks also make a lot of money advising companies on mergers and acquisitions. When they buy and sell stocks and bonds for clients, they earn a small fee for each trade. These small fees add up quickly when you're dealing with billions of dollars. Finally, they charge fees to manage the money of wealthy people. Let's take a look inside those big buildings and uncover the intricate world of investment banking. We'll explore what goes on in the different parts of an investment bank, from the bustling trading floors to the high-stakes boardrooms. The front office is where the exciting stuff happens, the deals, the trades, and the strategies that drive profits. It's the heart of the action, and where the most money is made, often celebrated with high fives and cheers. Here you'll find the Investment Banking Division, or IBD, which is the core of any investment bank. The IBD is responsible for providing strategic advice to clients, helping them raise capital, and facilitating mergers and acquisitions. IBD is split into industry coverage groups and product groups, each with its own specialized focus. Industry coverage bankers are experts in specific areas like healthcare, technology, or energy. They get to know companies in those areas, understand what they need, and offer tailored investment banking services. These bankers build relationships with corporate clients, providing insights and solutions that drive growth. Product groups, on the other hand, focus on specific types of deals like mergers, loans, or selling stock. They are the experts in structuring and executing these complex transactions. Whether it's a merger, an acquisition, or a public offering, product groups ensure everything runs smoothly. Then there's sales and trading, another crucial part of the front office. Salespeople connect with big investors, share investment ideas, and take orders, acting as the bridge between the bank and the market. Traders, on the other hand, buy and sell stocks and bonds very quickly, making split-second decisions that can lead to significant profits or losses. Section 5. Navigating the investment banking career ladder. Working in investment banking is tough. It's very competitive, demanding, and a lot of hard work. But if you like fast-paced, high-pressure jobs, it can be rewarding, both in terms of money and your career. The entry-level job is the analyst. Analysts are usually recent graduates from good universities. They work long hours, analyzing financial information, building models, and making presentations. After a few years, analysts can become associates, managing analysts, talking to clients, and working more on deals. From there, you can become a vice president, VP, director, and finally, managing director, MD. Section 6. The Titans of Wall Street leading investment banks. A few big companies, called bulge bracket firms, control most of investment banking. These are the famous ones you've probably heard of, like Goldman Sachs, JP Morgan Chase, and Morgan Stanley. But there are also smaller, more specialized firms called boutique investment banks. These firms often focus on specific industries or types of deals and can be strong competitors. Section 7. Goldman Sachs. A case study in investment banking success. Let's look at a big investment bank, Goldman Sachs, to see how these firms work and make money. Goldman Sachs is a huge financial company with lots of different businesses, but investment banking is still its main focus. By looking at Goldman Sachs's annual report, we can see how much money each part of the company makes. This shows us how a big Wall Street firm works and what makes them profitable. Goldman Sachs shows how important it is to be flexible and adapt to change in the world of finance. Section 8. Cracking the code skills and strategies for breaking into investment banking. This section will guide you through the essential skills and strategies you need to break into the competitive world of investment banking. So, you want to work in investment banking? Get ready for lots of competition and long hours. The journey is tough, but with the right mindset and preparation, you can make it. But don't worry, if you have the right skills, prepare well, and work hard, you can improve your chances. It's all about dedication and persistence. First, you need strong analytical skills. These skills are crucial for interpreting data and making informed decisions. Investment banking is about analyzing financial reports, building complex models, and understanding lots of data. You need to be comfortable with numbers and able to spot trends and patterns. You need to be good with numbers and spreadsheets, and be able to think strategically. Communication is also important. Being able to convey your ideas clearly can set you apart. Investment bankers need to explain their ideas clearly, both when speaking and writing. Effective communication can make or break a deal. You'll be presenting to clients, explaining deals, and writing reports. Your ability to articulate complex information in a simple way is key. Networking is very important too. Building relationships can open doors to new opportunities and collaborations. Investment banking depends on relationships, so start building your network early. Attend conferences, join finance clubs, and connect with professionals on LinkedIn. Go to industry events, talk to people who work in finance, and make connections. Seek out mentors who can guide you and provide valuable insights. Finally, be ready to work hard. The hours are long and the work can be intense, but the rewards are worth it. Investment banking is not a 9-to-5 job. It requires dedication, resilience, and a strong work ethic. If you're willing to put in the effort, you can succeed. Section 9. Conclusion. The enduring significance of investment banking. Investment banking is sometimes seen as greedy, but it's actually a very important part of how our economy grows. Investment banks help companies get money, help companies merge, and keep money flowing in the financial markets.